HDFC Bank 2230, our estimates were 2325. So for once, HDFC Bank numbers, okay, 2320, okay, excuse me. So no, okay,
yeah, you did it right. You did it right.
2230?
2230.
2230 versus 2325. So for once, HDFC Bank numbers are slightly below what the street was working with. I don't possibly see a massive reaction on this because the asset quality seems stable. So maybe there are one-offs that have come into play out here. And that too marginally by around 100 odd crores on a base of 2300 crores. So it's not too much. But yeah, for once, HDFC Bank does miss estimates. So I think the net profit would have grown around, 23 odd percent versus an expect of 26 odd percent.
Yeah, but like you said, you have to see it in context of the overall growth for the bank this quarter around, and it's about 100 crores short of the poll estimates. I would say that the numbers would largely be in line, mildly disappointing on the bottom line, but no major shock coming in, not being completely off the course. The net interest income will be the important aspect to watch out for. If there's a bit of a disappointment there, then of course those numbers will perhaps bring about some reaction on the stock. The stock has come up from the day's highs. Right now what you're seeing are the net NPA figures, 0.3%, gross NPAs come in at 1.1%, largely flat quarter on quarter, no surprises there. Net NPA also unchanged. The pre-provision profit was likely to be at 3855 crores, which is up about 17%, so that's also going to be key. How much provisioning have they done? The provision coverage ratio, net interest margins are likely to be very stable this quarter around. Their fee income growth is expected to be fairly healthy, 17 to 19%. You can see the way the stock is stabilized. It was up almost about 1% plus, is holding on to a percent gain. The net interest income figure, we are expecting a number of 5,100, which is a 16% growth. But let's see what the net interest figure comes in at. Also with the provisioning figure, what that amounts to in this quarter. Nitin Kumar, Banking and Financial Services Analyst at Quant Broking, joins us for a quick reaction. 100 crores below the ET Now poll, provisions coming in at 483 crores. Nitin, how would you read into these numbers?
Overall, the numbers look a little lower than what we estimated.
Okay.
Though the NI has been slightly better. We estimated close to 5,100 crores of NI, and they have done slightly better than that. But at the net profit line, the numbers are a little lower. That one reason could be the unhedged foreign currency exposure, the provisioning related to that. The bank would have done it. We have seen it in the case of IndusInd Bank, and I think that could be one reason why the provisioning is higher than what we estimated, and which has affected net earnings.
Rajiv Mehta joins in as well with his take on the numbers. Rajiv, disappointed marginally with the gross NPA uptick and the slight miss on the net profit, or not quite?
Yeah, absolutely. I think slightly disappointed with the overall performance, though I should say that the NIM number is pretty robust than our expectations. I think one of the headline disappointment also comes in from with low growth in the quarter, because YOY growth is at 20-odd% in advances. We were expecting that it would be around 23-24%. So even I think headline disappointment is as well as in the advances growth. That said, the bottom line, of course, slightly disappointed because we did see quite meaningful uptake in the gross NPA levels this quarter, which we were not expecting.